Jay. I think there's been a desire amongst battery manufacturers to simplify their cathode chemistry by removing cobalt. Cobalt's a problematic metal for cathodes. One of the ways that they can do that, and we saw that with Tesla's announcement, is to increase the content of manganese in the cathode. An announcement by BASF a couple of years ago sort of showed similar intentions with a design for a 70% manganese cathode. So I think that this is going to be a theme for coming years, and I think you'll see more manganese in batteries going forward. So cobalt is an expensive metal, firstly, so removing cobalt from the battery cathode chemistry will reduce cost. The second major point is that cobalt has lots of ethical and environmental issues around its production. Most of the production is from the Democratic Republic of Congo, and battery makers these days like to see transparent supply chains with clear visibility on carbon footprint, making sure that their metals come from ethical sources, and cobalt typically doesn't fit this bill, whereas manganese does. So those are the main drivers. Yeah, the main driver of manganese price is demand, and demand is driven primarily by the steel industry. So as economic growth continues, steel consumption continues, and manganese demand continues. On the flip side, on the supply side, you're seeing a real fragmentation of manganese supply in that domestic production in China is in decline. It's in decline in Australia. Some of the jurisdictions where the bulk of manganese units are sourced from are problematic geopolitically, like Brazil, South Africa, West Africa, etc. So we think the fundamentals for price are solid, and we think over the next 3, 5, and 10 years is a long way to look out, but we're pretty bullish on it. Yeah, so when manganese is used in smelters to make alloys for the steel industry in particular, or indeed when it's going to go into batteries, the impurity profile is really important. So there's a big value in use part of the equation on pricing. So at Butcherbird, our ore is incredibly clean from the point of view of contaminants like mercury, cadmium, arsenic, and other toxic metals. We have a high silica content, which makes it particularly useful for the production of silica manganese. And we have a number of other impurities that are at very low levels that make it really attractive to end users. So we think both from a point of view of battery makers who need really pure manganese to make their cathodes, and steel makers who really have these value and use requirements, the Butcherbird manganese product will fit very nicely into both markets. Predicting the manganese price is a bit of a dark art. It's quite a volatile metal because the supply-demand balance can be quite delicate. What we did was take a long-term average view and project that forward with some modifications on the basis of supply-demand fundamentals. They were also advised by Roskill, which is a leading price forecast consultancy in the UK, and we combine those factors to come up with a price which is a discount to the various benchmark prices that are quoted, discounted for grade effectively, and that's how we arrived at the price. A really important question. I mean, one of the magnificent things about Butcherbird is that it is huge. We have 263 million tons of JORC resources already drilled out, and we believe that with more drilling, we would further increase that number. So it was a question of what size was sensible to enter the manganese ore markets, and we settled on the current development plan for stage 1. It does have a very long mine life and only uses a small part of the resource, so it's very clear that there's expansion opportunities, and we're looking at those very closely. We think that this will be a stage 1 startup with a very rapid expansion into further sort of ore production and or the hydrometallurgical processing for the high purity manganese products. And that will go on. I think it'll be stage 1, stage 2, stage 3 and beyond. This will be a long and enjoyable, hopefully, growth journey. So obviously we don't control the exchange rate directly, and because we operate in Australian dollars or will operate in Australian dollars and sell in US dollars, the exchange rate can have an impact on our revenues. We're talking with consultants at the moment about the right foreign exchange hedging strategy that will mitigate those risks. We think that that's an important part of protecting the revenue side going forward. Going really well, Jay. So we've, as your listeners would know, we've ordered all the long lead time items. They're on schedule for delivery. We expect to mobilise in December, start construction in January, and be commissioning within Q1 of calendar 2021. And there's no major impediments to that. So we're on track, on budget, and looking really good to hit our goals. So we deliberately kept the commissioning strategy for stage one really, really simple. So we basically bought off the shelf principal equipment, and there's no custom design. So really, once the equipment lands into West Australia in December, we basically need to mobilise at the site. There's some electrical integration to be undertaken, conveyors to link the equipment up, and obviously we need to start the mining process, but that's obviously very simple, as your listeners would know. The ore body starts from surface, so we don't have any major complicated commissioning issues. It's a really, really simple project. So after extended discussions with OM Holdings, it became clear to us that they were the correct partner for stage one offtake. They have a complex of smelters in Sarawak, Malaysia, so very close to our sort of export port at Port Hedland. They understand high silica ores, which is what we have at Butcherbird. They have in previous years operated the Buddha Creek mine, which produces a not dissimilar ore, and so they understand our ore very well from a value and use perspective, and we're able to provide competitive pricing for the offtake, and they also understand some of the premium markets that we talked about before. So we feel they're best placed to work with us to realise the price premium that may be possible in those premium markets. So we believe that the current round of financing will see us through to production. We don't anticipate any further requirement for additional capital. That accounts for both the principal capital to build the site, but also the working capital required to get our first shipment to market and get our revenue stream going. So short answer is no further funding required. Obviously, when we look to expand for stage two, that may change. But we are in discussions with various potential financing and offtake partners for future expansions, and you'll probably see some announcements on that in the next few months. Yeah, so we have done a lot of work on the metallurgy around leaching the manganese at Butcherbird, and then electrowinning that to produce an EMM product, a high purity EMM product. There's obviously a much bigger capital requirement to do that over just the exporting of ore, but we think the cash flows from stage one and then potentially an expansion in stage two to increase our ore exports will fund the development of that downstream processing infrastructure. And the other interesting thing to point out is that EMM is primarily a steel input still, like the ore, but the EV battery thematic is really taking hold now, and we're seeing growing demand from the manganese sulfate side of the market, which we think is really our preferred segment that we want to tackle. So it could be EMM, but we think if the demand is there from vehicle makers, stage two may well be a manganese sulfate plant. Yeah, manganese sulfate it's a chemical form of high purity manganese. It needs to be very clean for the battery makers to incorporate it into cathode manufacture. In traditional lithium-ion battery chemistries, they mix it with nickel sulfate and cobalt sulfate to produce cathode precursors. You saw from the Tesla announcement that the cobalt side of things is waning and the manganese side of things is increasing. So I think you'll see nickel manganese cathodes becoming more prominent, and manganese sulfate is the key input into that production chain.